Hello everyone, this is Tomo for the Market Zone. Thank you for watching this video. This is a new trade analysis video where I'm going to show you guys a setup I just posted on TradingView for pound kiwi, a harmonic setup with some structure analysis and Fibonacci's. Very interesting setup. If you want to read the full details of this setup, just go to TradingView, look for the Market Zone and follow me there, or visit my blog marketzone.tumblr.com and read the full details by pressing the link over there. Before I dive into the chart, I just want to take an advantage and wish you all a happy new year. I wish it will be as successful as you want it to be, and I wish you all to become better traders and highly profitable in 2016. So happy new year to you all. Now let's dive into the chart. One quick reminder before I start diving into the details of this setup and why I think it's interesting. Just to remind everyone, we are in the middle of the holiday season. We are a few days away from New Year's Eve. The market is thin, we have low trading volume, and of course the smart money is away, I don't know, somewhere on vacation with their family, the big banks, funds, and etc. So take it into consideration if you want to trade this setup this week. And the price is still very close to the entry zone, but if it will reach there, consider the fact that we are in a tricky trading environment, and maybe use smaller size positions to start building into your position if you are looking for a longer term like swing trading opportunity. We are talking about 700 pips potential profit here, as you will see later on, with 200 pips risk. So this setup can be relevant also next week. We'll maybe have some double bottom here. Do whatever you think it's right. I just wanted to point that out before I start diving into the details. Starting with the analysis, what we see right now is a daily downtrend on pound kiwi. It started back on October 2015. We have a lower low, lower high, a lower low, lower high, and a lower low. And now the price has reached the 618 retracement from this low. If you can see, I pulled the Fibonacci tool from the low to the high, and we've reached the 618 Fibonacci right near 2.16. That's the structure I just marked here on this chart. We see it was a resistance here, and now it is a support. 2.16 is the key level here. What we also see is a small bullish AB equals CD pattern that completes right inside this small support zone near the 618 Fibonacci level. Technically, we have several elements that support the potential reversal zone near 2.16. The first is this minor resistance structure level. It was resistance here, it should become support here. We have the 618 retracement I already mentioned. Usually 618 retracement creates some sort of a pullback or maybe a continuation higher. We can see AB equals CD, a bullish bearish ABCD that will reach even a higher high, but we are not looking that far away right now. So 618 retracement can be a reversal zone. We have the AB equals CD pattern that in a few seconds I'm going to show you how I created it. And we have also the RSI with which is near the oversold territory. If I zoom into the 4 hours chart, we can see small bullish diversion. It was inside oversold. Now it's we have some bullish momentum in the RSI. Back to the daily chart, we can see here that it's like bouncing near the oversold territory, can create a bullish reversal signal right here. So we have several elements that support the potential reversal, and now I want to show you guys how I created the most important pattern that guides me and made the whole thing here very interesting to me, the AB equals CD pattern. In order to show you guys how to create a simple ABCD pattern, I just delete these lines and start from scratch. I take a simple line, pull it from the high to this low, and then take Fibonacci retracement tool and see that we have a Fibonacci pullback. We see here the spike reached the 50% level here. Then what I do is take this line and copy it, same distance line. Let's delete this Fibonacci. So we have an equal distance line, and I pull it from the top of the pullback to where it reaches, and we see that the price is just pips away from the completion of an AB equals CD pattern. But that's not enough. I want to show you guys how to create a PRZ so it will be much more reliable than just two parallel lines. In order to complete the PRZ and make it more reliable and accurate, what I'm using, I just deleted this structure zone here to make it to allow you to see everything more clearly. I'm using Fibonacci tool called Fibonacci extension or Fibonacci inversion, and we can see that right below the completion of the ABCD pattern we have the 200 level extension. I also take extension of B to A, and I get the 1414 right near 2.17. That makes this zone between the 1414 and the 200 a Fibonacci confluence zone that completes the PRZ of the AB equals CD pattern. Now if you want to be more conservative and allow the trade some breathing air, or breathing room to maybe spike below the 618 Fibonacci here and create false break, you can use the 1618 Fibonacci extension of B to A and place the stop loss below. That depends if your trading rules and your risk management rules allows you to have 200 pips stop loss. That's if you want to take a longer term swing trading opportunity. That's the example I just gave here, 200 pips risk to make 750, but that depends on your trading rules. The main confluence zone is between the 1414 and the 200, and that completes the PRZ of this AB equals CD pattern right near the 2.16 structure zone and the 618 Fibonacci level, and that's what you should monitor and look for. Maybe smaller time frame reversal to time your entry and aim for the swing trade opportunity you see here. That's it for this setup. I have only one thing I want to share with you before I finish this. I'm wrapping up this video. If you haven't had the chance to look at this blog post, 5 things you should do before the start of each new trading year, I highly suggest that you close now this video you're watching right now. Go visit marketzone.tumblr.com, read it, and take the action items I mentioned here. They're very informative blog post with action items, the things that will improve you as a trader and prepare you to 2016. Go visit the blog. Let me know if you liked it by sharing it and pressing the like button. And of course, you can write me an email. Let me know what you think. I will really appreciate your feedback. But anyway, go visit the blog and read it. Very, very important things to do before 2016 or each new trading year for that matter. Thank you very much for watching this video. I wish you again a happy new year to you all, and see you in the next video in 2016. Bye bye.